Hello, lads and ladies. This is likely the last model that we're going to be releasing. Um, it's not going to make the other ones obsolete in a sense, but you're likely only going to want to trade this one and study this one going forward. It's basically like, what if we told you, once you learn the proper market structure basics of swings and some basic form of multi-time frame analysis, that all you really need are these proper fib settings and the entry model of the Wombo Combo, right? So rather than spinning our wheels and taking dozens of trades in areas that are likely not the final objective of the price movement anyways, this model focuses on taking the highest probability trade out of the area that has the potential of breaking highs or lows, or at the very least having a deep retracement into the move the opposite way, right? This is the one and done trading model. This is going to give several setups on a daily basis. This has a ridiculous probability of success, and you'll find all of this out in your own back testing of this model, which I'm hoping you guys all do straight away. So preserve your mental capital, study this. This is where the smiles are at. This is where the let's goes are at. This is where the who could have predicted this is are at. Let's get into it. So what exactly are we looking for? We're trying to find out what the higher time frames are doing, and we're looking for either a 5-minute or a 15-minute retracement to align with either the new trend or the higher time frame trend. So what we do is we pull, in this case, we're going to look at a short example. You're looking for the Fibonacci retracement of 61.8% to the 70% retracement of the move, right? So in this instance, we've got your 70% level here. You've got your 61.8%. This gives us our area that we're looking for the pullback, okay? The midpoint of that we also have marked out. That's the 65.9. Quite often this is going to be our entry area. This zone, though, should line up with our lower time frame narrative of going up to then go down, or having to go lower to then go higher, right? And it should line up with our area of interest. So often this will be like an SNDR. It'll be a prior zone, for example, the manipulation leg here after we broke the protected low. But either way, we're looking at, we've now broken a protected low here, and there's one in here. You're looking at a new trend forming. We're looking to get involved. You'll also notice that we're not drawing it from this low here. So we're not drawing it from the current swing. We're drawing it from where the energy of the move started to the area of interest, not including the manipulation. So if we play this through, we're essentially looking at an area of interest here. And because of this being a 1-minute zone, we're looking to take an aggressive entry if we see a reaction from this. So playing this one out really quick, you'll notice that we get held up here. Immediately trades up, filling this objective at the midpoint of this pocket. And you're immediately looking for your target of the 23.6 in this example, right? But with practice, you'll determine when you're looking for this entry and when you can start looking for this low or continuation of the trade. When you guys are starting out, until you achieve some mastery, take the trade from the pocket and then take your exit here. So again, this is the combo aspect of it, where we've got our trend, we've now got our area of interest, right, that we want to take a trade out of anyways. Now we have a pocket area in this, which gives us a very high confluence and the combination of multiple areas of high probability to take trades out of, right? So we want to be long in here, and now it's just a matter of determining what exactly we want to see in this area to get interested and take some trades. So you'll find throughout your back testing of this, and you guys better back test this model because you want to gain clarity on exactly what you're looking for, because there's a few ways that these can play out, right? It's not just, okay, I'm going to go long in here. Sometimes that'll work. Sometimes you'll get stopped. Fair enough. What we're looking for is a reaction from the area that's based off of what time frame you're looking at. So for example, in this example again, you're looking at this being a 15-minute zone. We're not expecting it to just tap off the top of this pocket here and go in a rocket ship. That might happen, but what we're really looking for is to stay out of trouble for the possibility of this knifing through the zone and closing inside of here. What we want on the M5 and M15 pockets is we want to make sure the body's closing here. And what we're looking for is we're looking for failure on the 1-minute chart in order to facilitate that movement, right? Whereas on the lower time frames for continuation, you'll often get these sort of candles that look something similar to this that deliver a movement, right? Some sort of weakness or some sort of reaction to come in, right? Expecting higher prices. With these ones on the higher time frames or intermediate time frames, you're going to want to look at some sort of confirmation. So in this example, if we play it through a little bit, we've got this knifing down in, right? We're not taking a trade here. It's in our pocket, cool, we're excited, yes, but we don't want to get wrecked and then the movement happens, right? So we've got our move here, okay, we're seeing a little bit of indecisiveness, cool, inside of our pocket, but we haven't really seen failure. We don't have a change in order flow, we don't have anything else. We don't want to get swept out. We're looking for some sort of manipulation to happen. You've got your low here. We have swept underneath this one inside of our pocket. Cool, right? And we don't want to get in too early. So this happens. We've now started to see a little bit of movement and some buying come in, but we're starting to defend this zone. So there's two ways of playing this. This is the very aggressive way. We are looking at taking this now from a semblance of a reaction that comes in. Or you've got to change the order flow, and now you're looking for that defense of this area to then send us up. So playing this through a little bit, you've got a little bit of downward pressure still. We've now broken order flow. We trade back in, and we're seeing major failure coming in on the bearish side, right? So again, we're not looking for anything too soon. We're looking for that attempt for the bears to sell off, closing inside of this on our intermediate to higher time frames here, right? Even the 5 minute kind of closed a little bit underneath because this is a 15-minute zone, right? And now what we've got is a defense of a pocket we're expecting to trade back up to this. So when you guys are starting with this, ideally, your main concern is not being too early, right? We're not trying to get involved here. If you are, you're expecting this to be a scalp because we want to see that intermediate time frame push down if we're in a 15-minute zone, right? We won't see that on the 1 minute. You will see that on your intermediates, okay? So this comes back down. We see this failure underneath this structural candle here. Getting involved on the safe entry anywhere in here, it's actually far better. And now what you're looking at is, say hypothetically you were involved, I don't know, somewhere conservatively here, 68.75, you go to stop here. That's actually 23 points because of the intense election volatility. You know, you got your 1-to-1 here. You can take 20 points, whatever the case may be, and then you walk away and you allow it to play out, right? So the stretch target, again, like we mentioned earlier, is you're taking a trade from the pocket. You're taking it off at the 23.6. We're not aiming for gold, at least when we're starting to grow our accounts, right? And the reason for that is because you're expecting some sort of a retest of this area. And what you'll find on these, this isn't one that I want you guys to focus on, by the way. We'll get into this in a second why. But you'll notice that this movement back down actually respects your lower time frame pocket as well, right? Closes inside, you got your inducement leg, sweeps everybody out, and now we're pretty much good to hit the 23.6, which happens pretty quickly, right? But for the retracement leg in, after we've hit our intermediate time frame one, we've now got this trading up. It breaks structure, and now what do we have? Now we have the energy of the move started here. We've got a high that's now responsible for breaking structure, right? This low put in this new high. Now we can draw from here. We've got our area of interest. So playing this through, you'll notice taps back in, cool. You'll notice here we actually get a manipulation leg through. Why? This isn't a 1 minute zone. This is an intermediate time frame one, right? So we tapped in. This low is responsible for trading back up to this area. We then get our inducement leg that cleared all these out. And now this breaks structure to the upside. And now what do we have? We've got a low that's responsible for breaking lower time frame structure. So eventually, when we get our retracement back in, now you have your 1 minute time frame, right? Your target's still the 23.6. We're still in a bullish uptrend. We're now getting our retracement into our lower time frame one for the safer confirmation entry. And you'll notice this is much quicker because this is finished business and done. This already broke structure. Now we're on the right side of our intermediate time frame and lower time frame trend, right? Very different than taking it in here. Here, we're almost expecting this to break structure based off of the intermediate time frame. Here, structure's already been broken. And now this clearly trades up immediately to the 23.6 of both. So again, to reiterate, we're not just looking at random fib lines on a chart. We're not just saying, okay, like let's get long at these areas regardless. We want to understand how price moves, what our highest probability, trading areas are going to be and why, right? So we're looking at this trading back in. We do have our lines here, but what does it line up with? We've got our big prior zone here. So now you have your midpoint of this zone inside of your pocket. Now you've got inducement taking a low here. What else do we have? We have lethargic movement trading into it, which we expect to lead to rejection. And now we have our area of location that we want to take our trade from. So it's a whole bunch of different things in confluence and combination that are making this a very high probability area of looking into. And you'll also notice as well, this movement back down, whereabouts do we want it to trade into? We've got our SMDR here. You've got your prior zone. You'll notice it barely misses the midpoint of it, fair enough. But what else do we have? You've got your SMDR here that's responsible. So we've got this area of interest, cool. And now, combination, we've got this area that it's lining up with. You could argue to draw it from here. Either one of them works. You'll notice that this 1 minute chart actually closes inside of the area of interest, right? Where the energy of the move came from. Either one of them works. What you're looking for isn't necessarily just lines on a chart. Again, you're looking for the combination of areas that price should be moving with trend out of, and then getting involved inside of those areas to take trades. So for this next example, we're going to walk through the anatomy of the trade itself, what exactly we're seeing, the areas that we're picking out in terms of structure, and then confluences that we're looking at, right? So clearly a strong movement up, and you could argue you're looking for retracements up, or at least to get long. But in reality, there's no real structure here. We have kind of this area that actually had a body closure underneath this. So this provides a swing. So now we're looking to see, at least on a lower time frame, what happens with it. And we find that this move actually builds an SMDR here that then breaks that low. Okay, so we don't necessarily know whereabouts this is going to go to, but once it's done, now we're looking for a retracement to get involved with the new trend. So this ends up trading down quite violently into this area. Cool, right? We go to our 5 minute chart, and when we start getting a retracement back up, now we're starting to look for the area of interest that we want to get short from, right? So this does this, okay? We've got our tap back into here, and you'll notice dropping down to the lower time frame, this area of interest lines up pretty perfectly with the zone itself that was responsible for breaking this SMDR to the left, okay? You'll notice as well that we're drawing the short from this high, not from this bull bar, because that's actually where the high was put in that started this movement, right? We don't have sort of a bull bar coming up and then your bear bars here to start drawing it from, right? We're drawing it from the high itself in this case. And we have confluence with the SMDR to the left. So you'll find if you draw up your area of interests, you've got your SMDR. Inside of your pocket, we're looking to get short from here, and we'll see what happens, right? So we tap into it, and you'll notice even if we were able to get involved in this movement, we have a couple of things. We have this inducement leg that occurred, then sweeping everybody out. This is a valid area to look short. And staying out of trouble, we immediately need this predominant low broken, right? Because this should break order flow if we're going to head lower, right? At least to tap into the move origin or whatever else, right? And you'll notice this doesn't break order flow, right? So this in itself, we're actually looking at this high being now weak as it's failed to do its initial job. Yes, we do have a body closure under this, but you'll also notice that this bar is not the last structural bull bar, right? We didn't close above this one. So this ends up trading back up, right? Sweeping out everybody finally, and then there's your initial trade, right? Trades below, great. So we're involved from here. This is your aggressive one. If you miss the aggressive one, you can still look for the conservative one. And by the way, how long does this take to leave? We're looking at this from an intermediate time frame perspective. So we got our inducement. We have our body closure that's going to be at least inside or below in this case, right? So we're ticking off all of our objectives. Excellent, right? This breaks the predominant low, and now you're looking for a tap back in, right? So from this low, you would draw it from here. You're looking for a retracement on your lower time frame to get involved. You get that here, beautiful. And now we're looking to leave. Now, your first area of interest that you're looking at here is the 23.6. That would be your conservative trade, right? You're looking for here, not necessarily the low itself. And you'll also notice that if we draw from this high to the area where the move happened from, you've now got the bullish case here, which would trade back in. Now, we're trading alongside our intermediate time frame, so we're expecting this to trade back into this area of interest, this manipulation leg, and then go lower, right? So we're not entertaining the bullish case, but what we are doing is acknowledging whereabouts this tap back in could come from. So you have this initial lower time frame tap. We've now broken this area. If we're going to tap back in again, we're going to tap back in from this low, ideally to this high, right? Get rid of some of these lines on here, but we're looking for a confirmation short from here, which then ends up being facilitated here, right? And down we go. Immediately delivering the 23.6 and then continuing lower, obviously smashing down this. But again, the key area here is that we're looking for a retracement into our combination, right? Our SNDR, our manipulation leg. This should trade back into the prior zone structurally to then get short. And now we have the combination of our pocket and our SNDR of a high probability area to start entering a position looking for that retracement down. So to clarify what we mean by this does not take place of structural analysis, this is actually a very good example, this movement here, because what you'll see is you might have actually been looking for the long given that we're in a higher time frame movement, and that's fair, right? And you'll notice as well, drawing it from this to the area of interest where price actually really came out of. You can even draw it from where the energy of the move came from, which would be about this. You'll notice that this lines up quite nicely with this area of interest here, right? So this is the multi-time frame analysis perspective of it, that even if we're on the right or the wrong side of the trend rather, we're looking for a retracement back down. We're looking for the area where this movement's going to stop. That's going to be at the pocket here, which then takes you up to the area here. And then if it fails here, now you're looking for a higher time frame move short, and now you're looking at whereabouts that's going to go to. So you have your, let's call it your 5-minute one, trading back up to your 5-minute pocket here. If we go to our 15-minute chart, you've got your area of interest. You're looking at this move. Whereabouts is our SMDR? It's this area here that broke structure here, right? So now if we're looking at your multi-time frame analysis, you've got this here. We're expecting that to be the area of interest that price gets held up at. And you'll notice no closures here, despite violent movement on the bearish side into here, right? Which then trades back up, likely to the pocket of this movement down. So a couple of different things with this, right? Number one is when to stay out of trouble. And the structural analysis part of it is that you've got your swing here, you've got a clean manipulation leg that breaks. So we have to at least acknowledge two things. Number one, the SNDR that breaks SNDR, the advanced areas video that you guys have all watched. This is key for this analysis here. So we're looking at this trading up. If we're going to fail and go lower, this is the area it's going to come from, right? So you can justify a long here from this area of interest, fair enough, okay? If you're able to get involved or not, it's irrelevant. We're looking at this area that's bouncing to deliver us back up to here. And then you're looking for that change in order flow that occurs. If you're long biased and you see a change in order flow inside of a key area that the bullish cause has to break, now you're at least looking at this low being in jeopardy and then taking this one and trading back down to your next area of interest, right? That's just structural analysis 101. If what we want to see happen is not happening, then we're expecting the opposite to happen, right? And this is where reacting and pivoting comes into play. Otherwise, you might have been looking for, say, long out of this, and now you're getting wrecked. Why? Because you're not in line with your structural analysis and what the order flow is telling you that we're trading back down into for an objective. All right. Going back to this example, and we'll look at some examples from last week as well at the time of this video. We're going to dive a little bit more into the entry model and some sort of strict criteria here now. And throughout your guys' back testing of this, you're going to understand, based off of your aggressive level and your personalities, whether you want to be involved in the aggressive trade or waiting for a little bit more confirmation. And both are fine, right? But we need to know exactly what we're looking for in order to determine whether it's an A plus or whatever else. So for me, the A plus comes in when you've got your area of interest. In this case, we've got our SNDR here that broke SNDR, cool, right? We've now got our pocket inside of it as well. Awesome. And now what we're looking for when we're here is we're looking for some sort of inducement, right? We know that this movement here especially, we've got some bear bars, cool. We're expecting them to get ran ideally into our area of interest and then fall out, right? That's A plus, you're looking for inducement. And then staying out of trouble after you've hit the button is understanding what the first objective is, and if that's not filled, then the position's in jeopardy and you might get a second leg of inducement or a 3 drives pattern or whatever else, okay? So going back to this did not put in a valid high here. So we're expecting higher. We've got some bearish price action right underneath our area of interest, so we're quite happy. We're tapping into the SNDR right now, but we're not in our pocket. So we end up trading higher and higher, right? So now you're looking for that sweep into, ideally above this. In this case, we swept this candle and your entry could be the open here. This is your aggressive sweep model, pairing it with the Wombo Combo now. Unless you're being hyper aggressive and taking it inside of the zone, right? You might want to look for some sort of reaction in the area of interest. We don't need to be at the top. We just need to be right, okay? The aggressive model, you don't want to be selling in here. You're going to wait for confirmation in that case. But in terms of being aggressive, you want to see a reaction from the zone and then pair that with an entry model, right? So in this case, the short would have been the open of this candle at 641 in here. And you're now expecting this manipulation to hold, right? We've got a body closure under this. We want a body closure and a trade underneath this one, right? And we're looking for it to trade back down to the 23.6. So obviously favorable risk reward. We're quite happy with the area location and what's going on here. But as you see, we trade down and we're not seeing this break yet, right? So we get this movement back up. We've now broken order flow on the bullish side. We haven't broken down here. We're a little bit concerned. We would consider taking our position off here or at least going to break even, which would have been triggered, right? So now we're looking at the sweep of this. The trade is not invalid yet. Just this area is telling us that we're a little early, right? So we want to mitigate when we're wrong and not hold and, you know, potentially be really wrong on the position. But we want to at least react to what price is doing rather than follow like a strict set of criteria, right? So now we've got our movement here. We're grinding up. We've got lower time frame order flow. We're expecting this high to go at 647. The aggressive trade is the sweep of this inside of your Wombo Combo pocket, right? So you get that here, right? That goes here. Let's say that went off break even. You've now got your short above this for your sweep, right? If this trades up and then trades back in, which happens here. Now we're short with our stop above, assuming that's going to be manipulation. Oops. All right, so let's drag that back down. Let's just do a 10-point stop for now. And again, same sort of target. Trade's not invalid, right? For it to be invalid, we would have to have a major body closure above the pocket itself, right? And relative to this time frame. So again, this is following through. We've now got a body closure underneath our last structural bull bar. Cool. We're now break even. We've traded underneath this. Awesome. And now you're expecting to trade back down to here. You're also looking, if you're already involved on the aggressive model, you're looking for the trade back in and you're looking for that sort of confirmation, right? So the aggressive model wants to see the conservative model hold. You're expecting this to trade back in and fail if your trade's going to be valid. Now that you've seen your first criteria that the conservative model is waiting for. So the conservative model, again, you're looking for that change in order flow after this has happened, and now you're looking for the retracement back in, right? You'll notice that the lower time frame does not wait for inducement. You're looking for a location trade and the reaction out of it. So taking this trade inside of here at say 643, you're now looking for the same target, right? You're just paying a little bit of extra risk for higher probability and confirmation. And down we go. Okay. So in this next example with confirmations, we're going to look at a couple of different ones. You'll notice that this move tapped into this combo area from the energy of the move down here. And now we've actually broken structure on the upside here, right? You got this body closure above this candle that was a protected high. So now we're looking for the retracement back in. You'll notice that we didn't actually get it here, right? This movement down from this area didn't quite tap into it here, and instead went up. We are expecting when this taps back down though, we're not drawing it from here. You're drawing it from the low of the move itself. So we're drawing it from here to here. And you'll notice a couple of different things. Number one is we got our first inducement underneath this low, right? That low was right above our initial area of interest, which didn't get tapped into. So we can look at this as being inducement, or at least a protected low internally. This low here, if we were involved aggressively, did not break this high. So if you've got an aggressive trade here, this is your first objective. Seeing some sort of failure come into here, you're not terribly happy. You're either break even or taking your profits initially. And you'll notice as well that we went underneath this low as a result of it, right? So again, your aggressive model, you've got your area of interest. You want to see your reaction. You're getting your sweep model in here. Your long aggressively is taking this trade here, and now you've got your stop underneath. Say you have a 10-point stop initially, but again, your target is the 23.6, right? That didn't end up happening right away, but what do we get? We got a body closure above this candle here. So now we're expecting the trade back in to now hold. Why? Because that's our conservative entry. So you've got this here. You've now got your retracement back into this area of interest, right? This is where people that are trading the conservative model of this are looking. So you're looking long inside of here. Your stop goes underneath. And you're looking for the same target at 199 here, right? So we trade back in. You end up getting this low fails to put in a new high. Get rid of this just really quick. This low fails to put in a new high. Obviously, we come back down and liquidate it, but we're finding major failure in here. This is basically what you want to see for your model. We break order flow. We trade back in again. Whereabouts? Shockingly, the pocket of this area, right? Shocker. And then immediate delivery to the 23.6. You'll also notice that all of this happens within this manipulation leg, right? So you have your Wombo confluence inside your area. You're still 15-minute bullish on this chart, right? This being the 15-minute protected low. We're only looking for longs in this sense. And then away we go. Now you'll notice as well that this failed to put in a new high. So similar to what we were talking about here, when this low failed to break this one in order flow, we then came down and liquidated it. This low here failed to put in a new high, so what happens when we flip? We come back down and we liquidate it, right? Which then finally delivers our new move. So guys, please back test this. Please study your confirmations on it. You're going to pair it with your existing multi-time frame analysis, structural analysis that you already are studying and know, and you'll find that the win rate speaks for itself. It's how we anticipate the market moving down to go up, to go down, to go up, and so on and so forth. In reality, you're probably only going to want to trade this model going forward, and please ask some questions and we'll get some discussion going in the group.